And of course, our top story on Newspoint right now. Asian stocks started Friday with deep losses as investors braced for further pain across global markets after Wall Street's $2.5 trillion rout. President Donald Trump touted Wednesday as a landmark in U.S. history, saying his tariffs would make America wealthy again. Instead, the steepest levies in a century sparked a rapid sell-off in risk assets, culminating Thursday with a 4.8% rout in the S&P 500. Shares in Australia and Japan opened in the red, while the markets are closed in China and Hong Kong. Trump's new trade tariffs caused widespread recession worries and sent investors fleeing to safe haven treasuries and the yen. Wall Street stocks plunged by the most since the pandemic's depths, wiping off $2.5 trillion in market value. The S&P 500 index sank 4.8%. That was its biggest drop since June 2020. The index entered a technical correction again following a brutal global rout in markets from Tokyo to London. Economists say Trump's Liberation Day turned into Obliteration Day for the markets. Now, the U.S. stock market is down almost 10% since Trump took office. This marks the worst 10-week start under a new president in 24 years. The last one was under then-President George W. Bush during the dot-com sell-off. The S&P 500 index is virtually in a correction over the 52 trading sessions since Inauguration Day. The Nasdaq 100 index shed 5.4% to mark its worst day since September 2022. This rout was driven by billions in value lost from biggest U.S. stocks. Apple's 9% loss led to a market value loss of $314 billion. Nvidia's loss was $209 billion and Amazon's was $187 billion. And Meta's value fell by $133 billion. Everything from sneaker makers to apparel plunged after tariffs on crucial manufacturing countries, including Vietnam and Indonesia. Some of the worst hit stocks were the riskiest corners of the market. The Russell 2000 index dropped 6.6% into what's called a technical bear market after losing more than 20% from its recent peak. A continuation of the sell-off on Friday threatens to extend the S&P losses to 6 of the past 7 weeks. The dollar dropped the most on record, oil plunged and gold eased from records. But Trump seems to be unperturbed about the deep plunge. He said the market response was expected.
To what's going on in the financial markets today?
Well, I mean, it's to be expected. This is a patient that was very sick. We really inherited a terrible economy, as you know, with a lot of problems, including loss of manufacturing and plants closed up all over the country. You know, we've lost 90,000 plants since NAFTA, if you think of that. 90,000. It's not even believable. And about 6 million jobs. And so it was a sick patient. It went through an operation on Liberation Day, and it's going to be a booming country, a very booming country. It's going to be amazing, actually. And we see it because we have trillions of dollars committed to come in, trillions.
Now, supporting evidence for the dark economic outlook is a slowing workforce and economic activity. U.S. service providers in March expanded at the slowest pace in 9 months. Recurring applications for unemployment benefits rose to the highest since November 2021. Friday's jobs data and Federal Reserve Chair Jerome Powell's speech become important for markets reeling on recession bets. For latest news, download the WION app and subscribe to our YouTube channel.